there are growth equity funds that are thinking about investing in tokens at this point. I think there are a lot of obvious choices or obvious candidates in Ethereum land, but I think that, the smarter money is going to be thinking 6 to 18 months ahead and thinking about what things will soon qualify for growth equity portfolios, not what qualifies for them today.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today I'm joined by Danny, Ryan Connor, and Daniel Shapiro to talk about all that is happening within crypto and outside of crypto. What's up, guys? Welcome back. How are y'all doing?
Bullish.
Doing well.
I don't want to overstep.
He's on his Solana phone.
I'm doing
You can
fine.
speak a bit.
I'm only making calls on my Solana phone this week.
Okay, what are we gonna talk about? Did we talk? We didn't do election stuff here yet, right? No. Let's do election stuff. Trump won. The golden bull is here. Clearly, the markets are very, very happy. I mean, this Bitcoin move is ridiculous. My eyes hurt from constantly staring at charts. Like, I'm not even buying. I wrote about this as well. I'm not even buying or selling anything. I'm just looking at charts. Doing basically nothing else. Ryan might fire me because I haven't done my reports in a week and a half just because I'm staring at charts constantly. Like, I have no attention span whatsoever. Clearly, the market thinks that Trump is going to be good for risk-on assets. To be honest with you, I don't know what it thinks of like risk-off assets, but what do you guys think? I kind of went on a little tangent. Ryan got upset, but what do you think? Ryan, you're not overstepping. Speak a little.
I think that, I think that we should all think about what happened over the last few months and remember all the accounts that told us that Kamala Harris would be as equally good for crypto as Donald Trump, and think long and hard about why we follow those accounts, because that was utter and absolute nonsense. You see in the price action today, and if that were true, this price action would have happened months ago. It's so nonsensical, and your bias is so right in front of you, just distort. You're twisting yourself in a pretzel to make that claim. And if you're not seeing the price action today, and if you're not saying, yeah, hands up, my bad, I don't know. It's a minimum unfollow.
To be fair, do not unfollow me, but to be fair, what I said was I think in the long run, Bitcoin is inevitable. Alts is a completely different story. But I stand by that, the fact that I strongly believe that there's always a bull case for Bitcoin. That was my take, but I completely agree with you in that I don't think we would have seen alt moves like this. I mean, some of this stuff is ridiculous. And what people are saying on Twitter is crime is legal now. It's a little joke, but what is not a joke is Binance can go ahead and list something that they probably shouldn't necessarily list. They can take more risks on with their listings. We saw fee switch conversations. We had Zahir from Split Capital put one up for Blur, and Athena. Whenever you put one up for Athena, we're having fee switch conversations. There's clear, both from exchanges as well as from protocols, that, okay, you know what, we can take more risks as well. I'm not a legal expert. I don't know if that'll work out for them, but it is pretty clear shift in tone, especially compared to 2022, 2023. Those days, it felt like everybody was kind of okay, relax a little bit. We had a bunch of those pods where people came up to talk about regulation and what's going to happen in DC, and now it seems everything is getting better.
Yeah, I think maybe one point to highlight here is we don't fully have the confirmation of a full red sweep yet across Congress, but it seems quite likely at this point with where House of Rep races are standing today. I think they only need a few more seats here and it's a done deal. So to that point, just given that the party's focus on generally deregulating industries and the crypto positive forces there, like it makes sense, the thoughts that these teams are having around being a little bit more risk on, going after these things that kind of they had their foot on the brakes for quite a while because there was a lot of concern legally. And I think if you see, the SEC shifting and other things, potentially legislation coming in, without anyone to push back on it, if you fully own Congress and the presidential seat, like there's not much holding you back at that point, from legislation getting pushed through, if the support really is there, which I mean it clearly seems like it is.
Yeah.
So that action makes sense.
Yeah, I saw that like top crypto folks were like already speaking with the Trump administration on structuring legal frameworks, um, really hoping for something on DAO liability, something better than what Wyoming has put forward. Um,
What is what Wyoming has put forward?
I guess they've put out a legal structure for DAOs that people aren't that confident in. That leaves like a lot of questions unanswered. So there needs to be some clarity there. And yeah, I think, just like kind of circling back to price action, like I think it's all, I mean, it's, it's very much warranted. Bitcoin up 25% since October 31st, Solana up 26, ETH up 30. A lot of the DeFi names much higher than that. Like that makes sense in this environment. And you saw Wintermute and Split Capital wasting no time coming to the front with proposals, which I think is a great call out, Bach. I think it's
Thank you.
worth. Yeah, I think there are two things that I would like to talk about, are one, like the impacts on governance. I think that this gives a green light for institutions to start participating more, and like DAOs are run pretty poorly. Like, what does that mean for those people who have been empowered by those organizations? Like, I don't know, activist investing comes to mind, and and then just like what tokens are up for grabs from like TradFi funds. Like, I think that's what everyone should be thinking about right now.
Yeah, let's get into that. Before the governance stuff, maybe let's talk about DeFi. And what DeFi. Are we doing Solana DeFi or ETH DeFi? What do we think? People will
Doing
be
both.
more interested in.
What about centralized DeFi slightly? So I think one of my takes that I haven't, I mean, I'm sure someone's given this, but um, I think that Coinbase now has the go ahead to essentially cement its lead as the largest American exchange. And so, right, like what does it mean if Coinbase can now list futures and options and perps, right? In an interesting way, that actually might take away opportunity from other DeFi protocols because it's just so easy to do everything in a centralized location. I think it will be interesting to see how much um, of that Coinbase pushes onto Base, um, and I'm sure it's a good amount, right?
Yeah.
So I think for me, like specifically, DeFi on Base, I think you have a convergence of two very two very bullish trends, and I think Base could become kind of the EVM parallel to Solana, and kind of cement itself as this one-stop shop where you go to do everything. And in an interesting way, right? Like there isn't a native gas token to like suck away a lot of liquidity. So if you're looking to get exposure to the ecosystem, other than buying coin, right, you actually have to directly invest into the apps. And so because you have to directly invest in the apps, like on a relative basis, the apps could get more investment than like a
Yeah.
Solana app, right? Because funds might just allocate to Solana. And so I do think we're going to continue to see some like explosive growth in the base ecosystem. Um, I think DeFi is probably the safest bet, but there's probably some consumer winners lurking.
It's a pretty good point. It's something that we saw that what you mentioned, Coinbase cementing itself as its lead. It's something, especially in the US. We saw FTX try and do that back in the day, and they tried to take down, maybe not try to take down, but they were competing against Binance, and obviously Binance got in trouble, and Coinbase ended up being the winner. I mean, they're making so much money off their sequencer as well, and they're gonna just keep making more and more money. Um, I don't know if that matters to them in the grand scheme of stuff, but I'm not sure if they'll launch a token. I think they should, and I think they might. I'm hearing different perspectives on that. Like protocols on Coinbase will say, protocols on Base will say, "Oh no, Base is never launching a token, therefore you should buy our token." Um, and then other people are pretty hopeful that like smart fund people are like, "No, they'll definitely launch a token." That doesn't make any sense. And honestly, with regulation now, I could see them. I agree with you that Base ecosystem is probably going to do really, really well. But I could see now that if regulation relaxes a bit more and we get some clear frameworks, why shouldn't Coinbase be allowed to launch a token? I think it should be. Yeah, what do you guys think, Brian? Danny?
Yeah, I think really great points, Dan. My pushback would be that I don't think that base launching a token would be bad for base protocol apps. I think that the pie, like if it's a fixed pie and investors are thinking where to allocate, like I think that that makes sense. But I think that like you need so you don't need a lot of capital to come into crypto to really expand the space. So I think it's like very obvious that the space is going to expand, even if the vast majority of TradFi investors take a very long time to get comfortable with everything. So I don't think that that would be bad. And I do, geez, when is Base going to launch a token? Like, I don't know. I would like to see the poly market odds on that. Sub 12 months, like, I feel like it's highly unlikely. So, like, I kind of want to push it, like, into, like my unknown bucket, as in, like, a 24 months or greater thing. But who knows? It really all depends on, like, the stroke of the pen from the Trump admin and Congress, right? Like, we're really going to need to see what that enables for Coinbase. Yeah, it's interesting to think about base dominance going forward. I mean, they've done a really great job. Like they've kind of surpassed Arbitrum here as like the third biggest ecosystem, clearly. And with ETH kind of just giving away its market share, it's Solana and Base right now. Base does have like this big and inherent advantage with distribution. Um, I don't know, but I feel like the UX challenges and like the empirical evidence of Solana just winning over crypto people. I don't know. Like maybe there's another chain that like partners with Solana and pushes some sort of distribution advantage, or like maybe the phone takes off on Android devices. Like I don't know. I really don't know what that looks like going forward. But those are the two fastest horses today for sure.
One thing we saw is Robinhood and Arbitrum working together. And we also saw Robinhood CEO today come out and just full post. Was it today? Ryan, you sent it. I don't know if it was today, this week. Came out and bull posted crypto listings just being much cheaper and much more efficient than TradFi. And that's kind of been the narrative that we've been selling to TradFi to an extent. Like apart from the inflation thing, it's really been like it's better for transactions, better for settlement, no more T+1, T+2. I don't know how relevant that will be. I think the Coinbase to Base relation is very clear and like symbiotic. I don't know how clear the Robinhood to Arbitrum thing is. I'm worried that it will be like a 2021 partnership scenario. And if I'm Arbitrum, I don't want to talk about bearish stuff on this pod because we've just had a fantastic week. But like, if you're Arbitrum, you got to be a little bit worried. Like optimism is very clearly winning the stack race, either by virtue or because they know how to spend money. However you want to put it. Base is very clearly winning the user race. Like Arbitrum kind of fumbled that lead. I don't know what they're gonna do. They have Stylus coming out, which is supposed to be good. Daniel Shapiro, you're focused on Base. Danny, Ryan, I assume you guys are focused on Solana. What specific things on Solana are you guys interested in, and what do you think benefits from better regulation?
Yeah, I think that in Ethereum, but also true for Solana, like that there are growth equity funds that are thinking about investing in tokens at this point. I think there are a lot of obvious choices or obvious candidates in Ethereum land, but I think that the smarter money is going to be thinking 6 to 18 months ahead and thinking about what things will soon qualify for growth equity portfolios, not what qualifies for them today. And I think that's a lot of the things in the Solana space, particularly like a Camino, right? Like you see how they really cemented itself as the like number one lending protocol in EVM land. Lending has really strong network effects, I think, empirically in crypto. I don't see why Camino can't pull something like that off. And at being technically the number one or number two ecosystem today, like I think you just need some de-risking on the Solana end in terms of downtime and a few more months of like industry leading KPIs and DEX volume and rev. That I think it's pretty obvious that something like a Camino, potentially a Drift, certainly Jito, just like considering their cash flow, like those things make sense for growth investor portfolios. And you could see some institutional flows there, and like token prices getting pretty solid.
Yeah, I think the other part that I'm considering right now is, aside from maybe who's willing to buy these tokens, but also if we get clear regulation coming up for institutions to actually utilize these applications at scale. Like, if you have funds and firms that are able to actually deploy capital onto DeFi apps in some regulatorily approved fashion, picking horses for that sort of future state also is sort of an open question at this point, because I think that's not something that happens in 6 months. That's something that happens probably over years, right? You need clear legislation before those actors start to move, and then that it takes time, and they want to pick out um, the safe place, the place that they think is going to stick around, and that is like a meaningful product potentially for them to actually utilize park capital there, outside of buying maybe a token as an investment. So some of those strong like candidates on the ETH side, like an Aave, for example, those stick out. But like Ryan mentioned, like there are clearly some kind of front horse winners in the Solana ecosystem as well that have kind of emerged over the past year. Um, we'll see if those kind of continue to solidify, but I think certainly like those are going to be the ones to continue watching and see, like going into the future, like over the next couple of years, like yes, what should you consider buying, and like why? What do the cash flows look like? But where do you see that maybe next kind of like wave of capital coming in? Because it won't just be retail users at that point in the future.
Completely agree. And just to add on to that a bit, I think um, one thing to be careful is I think Solana is going to probably go through quite a bit of changes over the next few months, like protocol wise. I mean, there's so much attention on that ecosystem and so much money going through it that there's places to pick winners, and then there's also like sometimes you have to shift away from them. That's one thing that I've been thinking about a lot, because I mean, last cycle ETH just got so many apps, and like other chains also got new apps, and you kind of always have to do this rotation game, especially towards the end. That's just one thing that I've been thinking about. On Solana, I mean, we've already talked about these all throughout this podcast for the last 6 months. That's why people bully us sometimes. But Parcel, I feel like it's kind of under discussed. Danny, you wrote about them. I've been thinking about it. I don't know how relevant they'll be, but I like their data side, and I think they'll catch a narrative of.
Yeah, I think that the really exciting case for Parcel is that there's no existing competitor today. You can't do what they're doing on Parcel in terms of trading real estate markets to that extent anywhere else. You can do that really illiquidly on like the top 20 markets in the US today on futures contracts, or on options contracts, but there's no volume there. So they have a really like differentiated product that just doesn't exist, and there's no competitor for them in the space at all. So I think clearing up regulation there is a potential boon for them, because obviously the target market is not for me and my neighbor Joe to put $100 on the Miami market, right? You want funds to hedge their books, right? You want REIT funds to hedge like their specific allocations to, like, oh, we have properties in Miami and Texas and in Paris, and you want them to be able to have it up and downside exposure as they please to kind of fill out their books like that.
Yeah, and if anybody wants like a quick catch up on Parcel, you can read Danny's report. If you're a sub, if you're not a sub, you can check out. We did an episode with them. They were very well spoken, and they explained the product very well. I had a lot of questions going in, and they managed to answer all of them. I guess moving away from Solana, we have a DEF CON day announced ETH 3.0, even though Justin doesn't want people to call it that. What do we think? What are our initial takes on single slot finality and sub 4-second block times, but in 5 years?
So I mean, obviously, like there's the clear and obvious take that's just too slow. But I'm gonna give something just a little different to just, I don't know, add more depth to the conversation. Like I don't think it matters. I don't think it's relevant. I don't think it's relevant at all in any way, shape, or form. Like I think Unichain was kind of the announcement of Unichain, I think, has shown the hand of what the direction of the space is, which is the largest applications that find product market fit are going to go create their own chains. And so I don't think it really matters what Ethereum does at this point. Like I think that it could be the security hub, right? If apps choose to create L2s, um, obviously you do have app chains still, but that infrastructure isn't really built out that in such a way that it's like as viable as just launching an L2. But I think as interoperability gets better, I think that the end state is every app is gonna launch their own app chain or their own chain effectively, and that's including Solana apps, Ethereum apps, any apps on any chain, right? Like I think that the most successful apps, if they're generating the vast majority of fees and MEV for a chain, and they're not getting that value returned to them, they're gonna tell the chain like, hey, either you gotta give us some form of rebate for all these fees and all this money that we're making you, or we're going to leave. And I think that's the end state. I think that's the direction. And so Ethereum, whatever they can, I really don't think that this announcement impacts that future that I see in any way.
Yeah, I think that that's an interesting take. Definitely respect it. The the problem is, if you're a holder of ETH, the asset, the ETH people have just told you we have learned nothing over the past 12 months, 24 months. We've been right the entire time. Everything that we're doing is preordained. We don't have to change. All systems like fire ahead. And I think that, just given the community pushback and like the obvious questions that like people are now raising, like the increasingly loud like Max Resnick camp, and like even like part of like I don't know, call it like the ETH marketing slash like social side of things, like they clearly want change, and people have talked about like really considering bringing ETH back to the L1, and they've had their chance to like have an open discussion about that and like look at the evidence, and they're not changing their mind. And for someone to not change their mind, like what the people, they, as far as like direction and end state, they haven't changed their mind since, call it 2017. That's like, I don't know, if you're operating in a very rapidly changing market and you don't change your mind, that seems like a weakness to me. So as an ETH token holder, like a large portion of the valuation, you can argue about monetary premium. You guys know what I think about it, but like a large portion of the valuation is going to be based on cash flows, and you can just kiss that part of the valuation goodbye. So like you have to think about that as a token holder. Like as far as ecosystem goes, like the end state may be app chains. Like I'm open to that possibility. I do think it's a low probability, but like sure, it could happen. Um, it signals more fragmentation going forward. So like from a short term perspective, as far as like getting users, like I don't know, the integrated approach has proven pretty good at that. So honestly, it signals more of the same. And the worst thing that I think that ETH folks can do is like hang their hat on recent price action to kind of like ignore that.
I think you make a lot of good points, Ryan. I think this future scenario of like everything being app chains. Yeah, I mean I would agree it's kind of up in the air, but one thing that like maybe pushing back against that thought is that I don't know. There is sort of this inevitability in that when any of these applications get large enough and they grow a large enough user base, like they inevitably want to grow their feature set and then like become sort of the everything app, as we've seen like with all social media giants attempting to kind of be the copy the success of like Chinese social media companies and be the WeChat, WePay, et cetera, of everything. Um, Not that we've seen this to like a wild dramatic success, but like there are a few cases, right? Like Uniswap is clearly going after this vision of trying to like grow their own pie, going beyond just being an app on ETH and going to being their own chain, and then likely expanding. Like, obviously you'll be able to deploy contracts and do other things on that chain besides just swap on Uniswap. And I'm assuming they have other plans in store to kind of continue growing their own pie. I think we see this playing out as well with like Jupiter, for example, on Solana. It really is like this key um, bull case of like the fat app thesis where Jupiter just drives so many customers directly to themselves. Like, forget all of the stuff that's happening behind the scenes. Like, normal users, they don't really know or care about Radium. They're going to Jupiter to swap, and they're doing perps, and they're setting DCAs, and they're doing all these things. And they have their own app, like separate from even like the Phantom Wallet app at this point. Like, that is the goal of these apps. So not that I would completely write in or write off the full app chain thesis going into the future, but I do think like more and more we'll see like these top winners continue to draw like more of the attention and more of the users directly themselves and be able to capture more of that revenue.
I'm gonna come to ETH's defense a bit here, even though Danny, you were very nice, you didn't actually say anything bad. I think it's very difficult if your ecosystem as large as Ethereum and one that has the reputation of liveness and stability to shift very quickly. That is clearly not doing them very well, though, because they can't shift very quickly. So they have to do everything very slow and carefully. The second thing is, like, Shapiro, when you started your I think your correct take of saying it doesn't really matter. I thought you were going to say that it doesn't really matter because ETH's still going to get a bid. And that's my kind of pretty basic opinion, is that I think TradFi is going to look at it and say, you know what, like BTC ETF, look at how much this is up. ETH is BTC, like it has some form of deflationary ultrasound money stuff, but it also has smart contracts, the internet of finance, whatever, the world's global internet bond, something, whatever they're saying at SON, and they'll see that there's an ETF and they'll bid it up. My worry is that because that happens, nothing ever gets fixed, and the ETH team continues to be headstrong economists, academics, as opposed to saying we need to build something that is like very quick and that is actually reliable. I do think there's space for multiple blockchains, like types. I do think that it makes sense to have one that's, I guess, more trustworthy. That's kind of a contentious thing to claim about ETH over Solana, but like, let's say that's the narrative that they want to go for: liveness, trustworthy. I think that's fine, but like Ryan said, if you're going to value something on cash flows or whatever metric you want to use, unless L2s are very clearly playing into ETH, which as of now, I think most people agree that they're not. I think like there's nothing you can do. You can like the chain as the chain it is. Like you can believe in the ethos, believe in. I value the ethos that Ethereum has over Solana. Like I like using Solana, but I like also Ethereum. I like the stuff that, like, I like what it is building towards. That I think it'll probably be fine because of an ETF bid or some form of monetary premium. Even though Ryan's probably gonna beat me up for saying that. But I mean, we gotta fix it up a bit. Like, it's just 5 years is such a long time, and I understand that they have to take their time because there's so much money on the chain, and like they're relying on this liveness thing. But on the other hand, you're not as good of a sovereign asset as BTC. You're not as good of an L1 as Solana. Like, pick it up a bit.
Well, yeah. Let me like clarify. So, like, I agree with both of you, right? Like, the reason why it doesn't matter is because ETH is destined to it's destined to fade into the background as just this like security layer for L2s anyways. So if anything, I think this will accelerate that, and it'll clarify that, right? Like they're not going to be able to change, right? Like they have set on this thesis that they're going to be the security hub for all these L2s, and I think, right, the fact that it's 4 years out that they could even get down to 4-second block time, like it just shows that like this is this is it. Like, so yeah, I agree with both of you in the sense, I don't think it matters in the sense that it's going to get a bid. I think that, they're kind of setting, not digging their own grave is the wrong word, because I'm fundamentally bearish on all generalized L1s. I think that everything is going to be hyper specific app chains, and where like those chains outsource consensus to security layers. And I actually think that setup um, maximizes the security budget of those app chains, and also gives end users the best performance and execution, right? Like if Unichain centralizes all liquidity on their chain, right, then like dexes, they exhibit some of the strongest network effects out of any application type, right? Like most liquidity, that's where the most users are, that's where the most fees for LPs are, so that's where they go, which gives the lowest spreads for end users. And if you add a viable cross-chain interoperability standard, then, right, you could be on one of a million chains, right? And if you want to do a swap, you send a single message to Unichain, you execute the swap there, and then you get the tokens back, right? And so you're only paying this flat absolute cross-chain message cost, but you're getting the best execution because all liquidity has been centralized in this one location. So you have all these little plug and play kind of APIs in a sense for all these specific use cases. And so, yeah, I mean, I'm biased. Like I think that architecture is going to be the end game architecture, but I mean, yeah, that results in ETH, losing execution fee. Like it's losing all that. So yeah, if anything, this just kind of cements the trend, which I agree with you guys on.
I think the really unfortunate part is that you can both be right. Like an L2s could grow 100x and ETH, the asset, could decrease in its valuation from today, just because of the way the economics scale.
I will say I don't think that would happen.
Right. I mean, we could postulate whether it would or it wouldn't, but just looking at the way that the economics scale today, right? Like 100x growth in L2s is not 100x growth for ETH, the asset. It does not,
Yeah.
it earns 1/100th of L2 revenues essentially. So that's just an unfortunate reality of what the economics of L2 scaling do for ETH the asset specifically.
And it's not even unfortunate. Like I think the value of OpenAI right now is like in the private market is like 220 billion, and I mean Ethereum's worth more than that. And so it's like I think just the valuation is so high, it's hard to see how it could go significantly higher, right? Like,
Danny, I think you're right. I think though, well, both of the Dans are right, but Danny, because I cut you off, I'm gonna apologize. And I think what I'm more don't look at me like that. I'm sorry. Swell launched. We'll get this is gonna lead into L2 talk anyway, but I'm just gonna do it. Swell launched. They are an optimistic rollup on the superchain. They do a whole lot of stuff. So they do liquid restaking, liquid staking, Bitcoin staking, liquid. They do vaults, and they're also integrated into Symbiotic and Eigenlayer. Who farmed Swell? Who's interested in Swell? What do we think about these? We had so many of these launch, and for what it's worth, like I think Swell's a good product. I like the team. I like what they've done. We just have so many of these that launched during the Eigenlayer craze, and Eigenlayer has just gone down. Like narrative wise, attention wise, people don't really believe in it anymore. Kind of tied to ETH's performance as well. But what do you think of stuff like this? I think this is probably the latest launch. How do we approach stuff like this at this stage that is launching, and just doesn't really, like, not a lot of people are interested in it.
I think, and I've said this before on this pod, that like the LRT space was super over indexed on. I think like it's a great product to use as a consumer. Like if you hold ETH and you want to earn that extra yield, like it's just a great product to go and do that. But I don't know that that makes all of these like 10 LRT protocol, tokens, great assets for you to want to buy. That said, something that I do think, like, I think these are interesting because they also play into the thesis behind like an interesting protocol like Pendle, for example, and doing yield trading on chain. The fact that we have like these very, I don't know, this wild assortment of like deep yield trades across native assets and protocol assets and DeFi assets, like it adds on to the strength of a marketplace like that, where you just have permissionless yield trading and lending on chain. So I think personally, like the growth of this category has been more interesting for something like Pendle than for the individual protocols themselves. But I mean, surely if you have a big bag of ETH and you like to earn yield on it, like it's been great for you. I don't know if you're going to swap any of your big bag of ETH into these tokens.
Yeah. One thing I agree with you, Danny, on everything. Once again, one thing I will say is when I was doing research for this pod and when I got the SWELL airdrop, I thought it was a lot more divided than what it is, but it seems like EtherFi is, I think they have like nearly 60% of liquid restake tokens. Let me pull up. Oh, there we go. Yeah, currently it has 63%, which is actually quite a lead. But Ryan, how much do you think market share matters for LRTs? How much do you think LRTs matter in general? I know you didn't do EigenLayer, so you don't really care about restaking that much, but
I think it's pretty clear by the projects that are leveraging these restaking systems that there isn't much demand for them to begin with. If there is demand, it seems to be like really hyper specific. And at the end of the day, like this was all just like a massive marketing scheme. Restaking is simple rehypothecation. There's nothing new going on here, and for that reason, like the success of restaking is solely for the for crypto mark. It's solely due to crypto's like appetite for rehypothecation, which is fine, and that's why it's been successful. People want to lever up their thing, but I don't like the evidence suggests that it's not crazy needed by the market, and it adds a bunch of risks that haven't come to fruition yet, right? Like there are cascading risks. Like this is nascent technology. Um, People are looping these strategies and like the wrong, some technical issue that causes like a massive slashing event. Um, it just hits so much harder now. So I don't love it, but it's going to exist, and it is what it is.
Yeah, I don't have anything specific to comment on Swell, but in general, like restaking and Eigenlayer, like I am extremely bearish on it. I think there's fundamental incentive mismatches between AVS's, Eigenlayer, and Ethereum. I think that there's adverse selection at play where only um, really poorly run or not needed AVSs are the ones that actually will go through Eigenlayer. And I just think that there are, Chainlink, especially now with the Chainlink runtime environment, it's effectively what Eigenlayer wanted to be, but 100 times better, and also provides more services, including cross-chain interop. So I don't think that it's ever going to take off in my opinion.
that's fair. Ryan, I know you said that it's because people like rehypothecation. I always thought it was because in crypto we have this, like obviously people like airdrop farming, but on the other hand we kind of have this FOMO of, oh, am I like making? Well, I guess this is like all across finances. People, you always want to like squeeze as much use out of your assets as you can, and I think Eigenlayer really played into that. You know, it's funny. Like, I watched this interview with Shiram, and when he asked, why should people restake? He was like, everybody will have to restake because, like, you want that yield. And I'm like, I guess, like, you're playing into something that, like, ETH staking is a bit different. I feel like, I mean, obviously, you want to get the yield on that as well. But there's also, like, it makes a lot more sense than, like, whatever I'm just rehashing old stuff now because we've talked about this months ago as well. But the incremental yield that you're going to get off eigenlayers, it's definitely
It's also incremental yield per unit of risk, right?
and you're adding 3 or 4 units of risk if you're doing this through
I think so. Like,
LRT.
yeah, you like double your slashing risk every time you loop these things, and then you get like an incremental 1% yield on your whatever you had. What's ETH MEV yield? Like 20 bips. Yeah, it's not great.
At the very least, we're not running back the raw Celsius like Blockfolio playbook here. Like these are actually decentralized protocols that like use on-chain contracts to stake and like provide yield. So at least in this case, like you're not going to get directly rugged by, the guy who runs the company running up a massive long and getting blown out. I mean, I guess you could if all the contracts are upgradable. Maybe you need to look into your specific protocol, but there is at least some kind of smart contract backing this here, and you're not just working with a centralized custodian in this case.
Hey guys, for today's snippet, I'm joined by Miguel to talk about Nillion and Nillion's vision. Thank you so much for joining us, Miguel.
Thank you, Boccaccio. It's great to be here again.
So what are some key things you guys are doing differently at Nillion?
All right. So one thing is the orchestration layer. So you hear other competitors talk about also mixing privacy enhancing technologies. But in our view of the orchestration layer, which is the ability to interact and combine different privacy enhancing technologies like zero knowledge proof or FHE or MPC or TEs, is that we really don't place any more weight on one over the other ones. So we're not biased towards any particular PET. We really think it depends on what problem you're solving for. Sometimes your trust assumptions don't need to be that strong. So TEs might be a solution for your problem. Like, for example, when you want to privatize or you want to kind of make the state of a game private, and that game is not really manipulating a lot of information. But sometimes when you want to work with LLMs or future AI, where you want to share your prompts, which contain a lot of sensitive information, you may want to go for other approaches like multi-party computation that have lower trust assumptions, more security. So I think that's something that makes us unique, that ability to combine the different privacy-enhancing technologies without placing any bias towards any particular one of them. Also, we're not a library. We're not just giving you an open source project and good luck with implementing it. We're actually public infrastructure, which means that there's a clear path between our SDK and the ability for you to develop applications and solutions using this orchestration layer and taking that application or that solution to market, because the step between the code and actually running that code on top of on real infrastructure, and also even the monetization of that code, because we have the token which you can use to monetize your application. Those are also given by us, and I think that also makes us pretty unique. Also, we focus on what's on top of PETs, so privacy enhancing technologies, because we acknowledge the existence of this huge gap between what applications need, so what developers need, and what privacy enhancing technologies are able to provide for. So privacy enhancing technologies are able to provide this very low level compute engine that resembles in a way to all assembly code. It's really, really low level. But what you need is really solutions so that you can build the next, I don't know, Uber or the next decentralized exchange. So there's a huge gap that has been traditionally filled with decades and decades of innovation in computer science, solving for algorithms around everything, like how to manipulate data, how to sort information, how to solve linear programming, how to, all different problems. And we're missing that on top of privacy enhancing technology. So we're placing our innovation efforts on trying to bridge that gap for different verticals. So we've started with AI, bringing in DWTs, which are a tool used in image processing to actually compress images. So DWTs, the discrete wave transform, is used in the JPEG 2000 image compression standard, for example. So we're bringing that on top of privacy enhancing technologies, and now we're able to take advantage of that from both FHE and MPC. And in doing that, we're bridging that gap, and we are offering faster solutions to developers, in this case to AI, because now they can work with PyTorch-like interfaces in a privacy-preserving way. Another thing I think that makes us unique is that we are usability first. So we acknowledge the fact that a prevalent problem in Web3 is that sometimes it's really hard to use. So we've made it one of our top priorities to develop our SDKs and tooling in a way that they're really easy to use by developers and users alike. And also, we built a platform that is made by developers for developers. So we've placed a lot of effort in providing a lot of tooling, interesting and concise documentation, tutorials. We're running hackathons periodically, and so on. So I think kind of all the combination of these items makes us unique.
Perfect. And what are you most proud of with Nillion, at Nillion?
I think it's the community. I mean, I'm obviously very proud about our team. The engineers, they're amazing. The cryptographers as well. It's not very easy to mix those two things because one has to do with maths, the other one with engineering stuff. But we have this continuum of people filling that gap, which makes it really easy to turn research ideas into actual products. Really happy internally also with the marketing team. They're doing an amazing job in explaining privacy enhancing technologies through the notion of blind compute, which I think is very visual. Like you can immediately understand and grasp what it's all about. So they've coined things also like or terms like personalized AI. So they're really doing an amazing job. The product people as well. So they're creating, for example, the AI VM, which is a set of it is like a platform to develop AI products on top of, or are focusing on things like data to earn. So providing this storage layer that people can then compute on top of personal data. But at the end of the day, this would be meaningless if it wasn't for the community. Who are building amazing products, both in the hackathons as well as what we call the FEs, which are founding entrepreneurs who are like founders of their own businesses and startups. We work very close with. So they're doing wonderful things, in healthcare, in data to earn, in games, in private decentralized exchanges, you name it. Like they're covering all the spectrum. Going all the way from Web 2 to actual Web 3 applications, and it is because of them that that we exist, and they are actually the the reason why I'm really proud of Nillion.
Perfect. And how can more people get involved with Nillion, both on the user side and the developer side?
Yeah, I think the best way is to go to our website, nillion.com. And then on the right-hand side, if you're a user, you will find links to X, so you can follow us on X. And we have a lot of active conversations and announcements, like, for example, our partnerships with different L1s and L2s. You can also join our Telegram group and our Discord channel. If you're a developer, you're probably more interested in focusing on Discord. Probably X is a good idea as well, just to keep general information about Nillion and partnerships. but also you want to go to our GitHub repos. So that's also a link you find on our website, and you want to start playing with our SDK. So download it and check our documentation. You may want to participate in our hackathons and get to know us better as a team. We're running one in short about AI, but we're running them like periodically, really. Yeah, so that's kind of, I think, the best ways to get in contact with us, both if you're a user or a developer.
Perfect. Thanks so much for joining, Miguel. Danny, you recently wrote a report, which is something that 50% of this call hasn't done recently. How was that? What was it about?
I did recently release a report. I wrote about Beam, the Web3 gaming space. I think it's differentiated from the perspective of, if you look at top sort of Web3 gaming protocols, they're heavily focused, as with every other category in this space, I think, they're heavily indexed around infrastructure. And I mean, Bach, you've written about the Avalanche pay-as-you-go system. The economics, like we've talked about, Ethereum L1 to L2 scaling and how much goes back to ETH in terms of revenues, like the economics of scaling these infrastructure systems, especially when we look at gaming as well, like it's pennies on the dollar. And so they are hard to want to buy, you know, an Avalanche or like an Immutable, et cetera, from a pure Avalanche, like a pure infrastructure revenue perspective. It really relies on, like, 1,000x growth of games utilizing these technologies, like serious growth of, users and transaction throughput volumes, et cetera. It's I think really equivalent to the, like, come for the tool, stay for the network type of idea, where you rely on getting this really big audience to come in and then like stick around and like swap a bunch of value and have that drive fees for you, which is difficult, right? Like, I think Solana may be the only case, and ETH probably last cycle, where we've really seen that kind of play out to a serious extent from a revenue perspective. And so Beam is a complete flip flop here in terms of like what it offers in the gaming space, in that it is basically entirely predicated on the value of its treasury investments. I think they may have the largest, if not one of the largest, DAO treasuries by non-native assets. So it's valued at something like 230 million based on their most recent treasury report. And that includes largely like gaming venture investments, some liquid tokens as well, some investments that have become liquid or have started to become liquid over time, and some other holdings, and then as well as technically the DAO owns a chunk of the Beam token as well, but they don't include that in that figure that's provided to folks. But ultimately, I think really like the core thesis here is that infrastructure as a bet on games becoming very popular does not really like leverage itself that well to, if you have a hit game that is very successful, that game, like an Axie Infinity last cycle, can do incredibly well by itself, because it's going to draw most of the attention to itself, right? You can have one hit game or one hit publisher that does incredibly well and draw tons and tons and tons and tons of users, mindshare, capital into that specific little pocket. For something like an Avalanche, like they can have one great game pop off, but I don't know that it's going to drive people to want to buy Avalanche. It's probably going to want to drive people directly to that game itself. So Beam is an opportunity to, like, their focus is investing in those potential successes in Web3 gaming, and then hoping to really capitalize on the growth of those projects. They do have an infra suite as well, but it's not really like competitive to the likes of these other projects that have been mentioned. If you go look at gaming, it's Immutable, it's Avalanche, it's Ronin Chain, it's a lot of these guys. So really that focus is in the investment portfolio.
How do we approach these things where it's, like you said, it's like, what's the regulation side of this thing? Like how, because it's already trading above 5x above asset values. If it's 230 mil FTVs, 1.2 bill.
I think there's a tough question there. One, obviously the recent excitement in the markets has probably pushed that as well, based on their recent numbers. I think there's maybe 2 points here. One, in that, if there are funds who want to get exposure to the Web3 gaming like category, but they are not like, they don't have a gaming guy, or they're not like that deep into the space to like feel like they can pick out winners and do, you know, seed deals or strategic deals into these projects. Like, I think it just provides that kind of broad exposure bet to the ecosystem, where versus having to go out and do that DD and pick out, you know, I need to pick out this Web3 gaming project or that. It's a category that's been quite rife with like, there are low effort projects in there that get raises. Just I think due to the nature of what it is, we saw that last cycle, and so there's probably some difficulty there in terms of selection. I think the other piece of it as well is that this is also an asset that's like, it's accessible for retail folks to buy who themselves could not participate in, you know, seed deals, you know, be an angel investor, maybe in a project maybe that they do think that they would want to invest in. They're not able to get into those rounds, so this kind of gives them that opportunity to kind of ride along with basically what is a decentralized venture fund that is doing exactly that.
What's the catalyst for either Beam or gaming? Outside of like the very obvious, like TradFi investor incremental capital coming into the space.
Yeah, I think the positive regulation that we're likely hoping for as an industry, and the, you know, potential easing cycle that we're maybe walking into in general, like, I think just inflow of capital to more risk on categories is one just key focus here. Like, gaming has kind of been, I think, ignored and left behind maybe for a few years, specifically in Web3. Like, raises and interest there have shed quite a bit over the past few years relative to like where they were at in 2021. So there's an opportunity here going into like again a more risk on environment, a lot of excitement, you know, Bitcoin surging to absolute new highs, like for investors to get excited again and enter the space. And I think as well, we're finally at that phase here where it's been a few years for some of the, you know, largest raises, most anticipated, like kind of AAA quality Web3 games actually coming out and being released. People actually getting to see them and play them for the first time. Off the Grid is a good example of that. Recently, it had a lot of, you know, excitement and hype around it. Obviously, they did a pretty big marketing campaign on socials. There are other games coming up, similar like to that same level, I would say, or similar level. Like, we've got games like Bloodloop. I think Shrapnel maybe would have been one of those, but that may be getting left behind just with the way the team is going. But ultimately, a lot of these games that kind of were maybe promised a few years back can actually get released, come to the forefront, give some, you know, idea of you know, get people actually using them, get some excitement and eyes back onto these things alongside potentially a more risk on environment. And I think that's a good kind of combination here for more eyes and attention back into the space.
Yeah, gaming's a tough one. Um, like you said, Danny, I think there just needs to be like one good game that gets attention into the space, or I guess just things just get sillier and sillier. I do think that when people make, I mean, in crypto, it's always like in DeFi, if you make money, like if you hear that people are making money in food farms or something, you come and try those out. If you hear that people are making money in DeFi, you come and try it out. It'll probably be the same for GameFi, to be honest with you. Like, we can harp on about, I love doing that as well. I love saying fully on-chain gaming is really, really cool, because it is. I think it's really cool, but I know for the vast majority of population, it's something that is not interesting. Owning your assets is not something that's particularly interesting. We've known this for some time. But if you can make money while you're playing video games, and you can own your assets and sell them, and that's how you can make money, I do think that there's, I guess, financial incentives is probably the way to get in it. That's our biggest tool in crypto, and it always has been. Deepin is the same thing. It's financial incentives. DeFi, it's the same thing, financial incentives. I guess like we just have to loop it up, Ponzify it, you know, bring some people on chain, and then we'll see if they stick around. I like this approach that we have, where like every however many years we just like bring in a new crowd. 40% of them leave, 60% of them stay. You know, we just keep doing it. I don't know how much longer we can keep doing it for, but yeah, I think it's fine. I think we'll make some people some money if people come here.
Yeah.
Sorry, for Ponzifying games, do you think that you're seeing more like DeFi degen Ponzi games or less over time now that like the capital mix has really shifted?
No, I think that's decreased. I think we're seeing more. Obviously, the focus of having financial elements, I think, will persist. Um, just because if you think about traditional like games like MMO games, MMORPG games like a World of Warcraft, for example, if the in-game economy for that was a real like on-chain economy with real currencies, like I mean, I think that's just fundamentally interesting. I think like for example, what the EVE Online guys are trying to do with EVE Frontier is just a great example of that, where EVE Online has historically been like quite literally a real economy within the game. People spending quite like extensive sums of money to play and like have their ship get blown up and need to fix that. So I think them stepping into this space and wanting to have like a kind of open, permissionless kind of sandbox for to do essentially the same thing, but really just like put it onto these like blockchain financial rails and like let it run, um, is a good kind of use case there. But yeah, I think the like raw, put your money in a. I mean, some of the early games were quite literally just like cute front ends for high yield farms, which I mean you could call it a game if you want to. I don't know if that's quite to the level of a true game, but I think we're seeing more like actual game development over simple like AMM yield farm.
I will say we're just not there yet. Like there will be a time, a few months where we get those back. The food farm loopty doopty games, the Ponzi games. I do like those. I mean, we had a few examples. Ryan, did you read my report? Did you ever read my gaming report? Let's put you on. No, why didn't you read it, man? I wrote that one specifically with you in mind because I was like, this dude needs he needs the gaming thing. So I wrote it out. 5,000 words, never read it.
I've read 75% of the content over like the last 12 months, and I didn't get to that one.
That's fair. That's fine. Always left behind. What I will say is, those games we had a few examples. Crypto Valleys. Did you see that one? You didn't see the ones where they were tweeting out saying minimum investment is $200,000? So we've had a few attempts. Crypto Valleys was the big one.
Is hamster racing a game?
Hamster racing is definitely a game, but that I wouldn't count that one. That was more gambling, I guess.
Yeah.
We've had a few yield games. I think we'll get more. I don't know if those will make the lasting impact. I don't know. I kind of go between like EVE Online is cool, but that appeals to a very niche crowd, like that type of game, and I'm not sure if that's the big. Like you're not gonna get billions on chain the way we like to say it with that game. You're gonna get a few niche people, people who are really into like one specific game. You'll get those. I think crypto would naturally appeal to them. I wrote this in my report. I think crypto naturally, like fully on-chain gaming, will naturally appeal to people who are really, really into like one game. Like I'm really, really into only one game, and I think that's why I find fully on-chain games cool, because I think it's just like it's interesting to play around with the nitty-gritty stuff. I think for the mass majority who go Black Ops Modern Warfare, FIFA, Madden, every year, cycle it up, Fortnite, whatever, I don't know if crypto will ever like. In all honesty, I don't see. Maybe I'm just being a stupid bear, and we'll get like a massive unlock. It's just at least not in the near term. I don't see that happening until like I know gaming studios are working on integrated NFTs and like on-chain tech to the way that to use them as rails. I don't see that this cycle. I feel like we're a cycle behind on that. Like we need at least one more. The investment's there, but
This statement has no basis, but like here's a catalyst for you. GTA 6, they launched the game and it's got blockchain tech. Like your currencies in the game are fully on chain. It's a real economy. Every publisher in the world I think they'd have their eyes on that. But like you're saying, Bach, I mean, who knows? We don't know if the big studios are going to be jumping onto this tech. Like in reality, if it's from the perspective that it allows users to like keep value from the assets that they own in game, like that's that's not a positive for those companies. So I don't know that that's going to be the driving factor. But if they can be drawn in from the perspective of like, you can build out these like deeper economies, and there's fees to be grabbed from the trading volumes and the activity associated with that, then that might be an angle. But
and not every game needs to be on chain as well. The last thing I will say is that I do think the president of the largest economy that the world has ever seen saying, like, I'm A, going to launch an Aave front end, B, I'm very pro crypto, probably legitimizes crypto and blockchain tech quite a bit. So I can see, I guess, more attempts this year, these next few years, from gaming. Like, it is legitimized. So I guess that could also be a bull case. I don't doubt that there are people working in these gaming companies that are really, really interested in blockchain tech. The only issue is that I think executives don't really want to take that risk. Like, yeah, that's really it. I think like until now it's kind of been a no word. But you can hear kind of rumblings of crypto becoming semi interesting and cool again. At one point it will be cringe again. At the very top when everybody's here.
I have a friend that works at Riot and a friend that works at Respawn, and like both of them are like what, like blockchain can't do anything, like it's just NFTs, it's stupid, it's scammy. So like it's probably going to take one game that does it right before like they go, oh, like, all right, that makes sense.
Yeah, we've talked about this previously, I think, when we talked about off the grid extensively, and I think that really is what it would require, is a truly massive success that isn't a short-lived, like short-term kind of one-time thing, maybe as was the case with like an Axie. But if you get something that really like crops up and starts to kind of punch into the revenues that these big studios are hoping to grab, that's kind of an eye opener, I think. But we're not there right now. I mean, maybe we'll be there in a few years. Hard to say.
My approach to gaming has been either try out games that are meant to be really, really intricate and like have an economy, in terms of crypto gaming, or like games that are very, very simple and are realistically like, either it's like a Tamagotchi type thing, or it's basically like DeFi food farms wrapped around. Like, I think those are the scales that are interesting to the majority of people right now, and that's the arena that I want to compete in and play around. And I'm really not interested in off the grid. Is cool, and I will say the team did a fantastic job of marketing, and I do think that it's an interesting game. I just, for a game to do well, you need a lot of people to play it and a lot of people to stream it. Like nowadays, that's it. It's not the same as it was before. People want to watch the streamers play the game so that they can do whatever dance they do. I sound like Ryan right now with my boomerism, but it's like, they want to do their Fortnite dances and their emotes and stuff, and you want people to play the game, and I just don't see them replay. Oh, bearish rant over, but whatever. That's it. All right. I am. Thanks for listening. Danny, Ryan, Daniel, Shapiro, thank you guys for coming on. This was a fun episode, an episode that I actually enjoyed a lot more than other episodes where I felt like what I was saying wasn't fucking stupid all the time. So I appreciate you guys coming on and letting me do this.
Yeah, you only said a few stupid things this time. It was good.
It's very rare for me not to say anything stupid. It's very difficult. If you speak for an hour a day, it's not. Well, I guess that's what most people do. They speak more than an hour a day, but anyway.
Bach, your Riz game is strong.
Thank you. Brian, thanks for coming on.
Risk game.
I got nothing else. That's it.
That's it. Ryan, thanks for coming on, man.
Yeah, anytime.
Oh man.
I keep coming on the spot. I can't read your reports.